Good afternoon, everyone. Welcome to the C-Suite Connect. I'm Billy To, the Regional Head of Retail Research at CGS International, and I'll be your moderator for today's session. All right, for those of you who do not know, the C-Suite Connect is a regional webinar where we introduce corporates from both the Malaysia and Singapore listed codes, the management to talk to you guys so you can actually ask questions directly to them. All right. Okay, so today we have NetLink NBN Trust with us. For those of you who are not aware of the company, it is a business trust constituted in Singapore and was listed on the SGX in 2017. Right, so the company's basically has a nationwide network, forms the foundation of Singapore's nationwide broadband network, delivering ultra high speed internet access throughout mainland Singapore and its connected islands. So the group basically designs, builds, owns, and operate the passive fiber network. All right. We will actually have sent out a webinar report for you guys to read up about the company, so you can actually look through the link that we have. And after the webinar, we will also share the replay and the key highlights of the webinar for all those who have registered for the webinar session. All right. All right. Without much further ado, I'm going to pass the time to Mr. Tong, the CEO of the company. Mr. Tong, yeah.
Hey, hi, good afternoon. Thank you, Billy. Good afternoon and a warm welcome to every one of you. Thank you for spending your lunchtime with us. I'm Yu Heng, the CEO of NetLink NBN Trust. I'm very happy to be here. I will take the next 10 minutes or so to go through a brief presentation and our 9 months results. Thereafter, I'm happy to take any questions that you may have. Moving on to the next slide. Please take a moment to take note of this disclaimer. My colleague has switched to the next slide already, but it's okay. So the usual disclaimer that this presentation may contain a forward-looking statement. So please take note of that. I will start with this slide. Let me do a little bit of recap about what NetLink does. NetLink is the owner and operator of the fiber to the home network in Singapore. NetLink is an essential enabler of the smart nation in Singapore because we built the fiber network that underpins Singapore's digital connectivity, digital future. We connect everyone, everywhere. Basically connecting all the home schools, hospitals, and so on. And through this, it enable and support everyday digital needs like remote work, e-learning, healthcare, transport, and so forth. I think importantly, the network is built into every new town, every estate, and NetLink network will continue to expand alongside all of this development across the island. The last point is also equally important. We provide open and equal access to all telecom operators in Singapore, so they could use our fiber to provide a broadband service to the homes and to other users as well across the island. Over the next page. As at 31st December 2025, we have a total of 1.517 million residential end user, meaning these end users, residential end users, are using our fiber for broadband internet connection. We have another 52,000 non-residential end user, which uses our fiber for broadband internet connections. We have other type of connection as well, 3,500 mbed connections, and these are used to connect to devices on lampposts, connecting to Wi-Fi hotspot, mobile base station, and so forth. Another 4,000 odd connections connecting buildings to buildings, central office to central office, data centers to data centers. We operate from 11 central offices across the island. So these will be buildings that you can find across the island in Bedok, Ang Mo Kio, Hougang, and so forth. So we operate from 11 central offices across the island. Fibers are connected from these central offices to all the surrounding buildings that they serve. Over to the next page. This is a key snapshot of the 9 months result. Revenue-wise, we reached 313 million, which is about 1.6% higher than the corresponding period a year ago. EBITDA-wise, we were at 215 million for the 9 months, about the same as the corresponding period months ago. Net gearing, very comfortable at 20%. Market cap at about 3.8 billion total market cap. Over to the next page. Okay, this is an important slide. We always use this slide to explain to investors as well as analysts. Because this slide shows all of our revenue stream as well as how resilient they are. So if you have been tracking NetLink performance over the years, you will see that we have always presented this slide to show the contribution from each of our revenue stream. For residential connections, the 1.5 million connections that I talk about, they contribute close to about 60% of my total revenue. As of December last year, for the 9-month period, they contributed 58.9%, close to 60% of my total revenue. The non-residential connection contribute 8.2% of our total revenue. And other type of connection contributed about 4.3% of our total revenue. Ducts and manholes, 6.2%. These are leasing of our underground ducts to other telcos. And then we also have co-location revenue. These are leasing of space in our central office to other telcos. They have to put racks, equipment racks in our central offices. So we will charge them rent, of course. So this contribute 5.5% of our total revenue. On the right-hand side, you will see non-rep revenue. There are 3 streams of non-rep revenue. One is central office revenue. We also lease out other space in the central office, so 4% of the revenue. There are other installation-related revenue. These are revenue that we collect from installation work that we carry out in the homes, in the offices, as well as outdoor location. I think the last one is also important, 6.1% ancillary project revenue. These are revenue from cable diversion work largely. We carry out cable diversion work throughout the year for different agencies like LTA, HDB, BUB, and so forth. As when they carry out work across the island, we will be notified to carry out cable diversion work for them. So we will move our cable away before they carry out their work. So for this, we will charge them the project cost, and we will earn a margin on the project that we execute. So you can see that these revenue are mainly recurring and predictable revenue, generating cash flows that are recurring and predictable. And they are either underpinned by the regulatory asset-based model. We are regulated under a regulatory asset-based model, or they are underpinned by very long-term contracts. Over to the next page. Here's a look at our 9 months profit and loss in a bit more detail. So I already mentioned that the revenue was 313 million, a bit 1.6% higher than the corresponding period. EBITDA about the same, 215 million. EBITDA margin close to 69%. And we have depreciation and amortization, net finance costs, etc. So I'll just highlight a few key points. Revenue increased by 4.9 million, largely because of higher co-location revenue, higher ancillary project revenue. EBITDA decreased by 1.4 million, largely because of higher other operating expenses, because we have a new central office in Seletar in the northern part of Singapore. So once we commissioned the office, we started it in last year, April, 1st April last year. So that means we start to incur a bit more operating costs for that office, central office, and also higher IT related costs. PAT decreased by 8.8 million. It's actually due to higher depreciation because we have a larger asset base, so it does not affect the cash flows. So mainly due to higher depreciation. Over to the next page. This is an interesting page because it shows you our balance sheet strength. Total debt is about 990 million. Overall debt maturity is about 3.4 years. Net debt EBITDA remains very strong at 2.7 times. For comparable infrastructure businesses, we see usually in the range of 5 to 6 times. So our net debt level is pretty manageable, pretty low. All our borrowings today are fixed rate, so we are not exposed to interest rate volatility. Interest cover is also very strong at 12.8 times. Effective interest rate for our loan on average is about 2.39%. So you can see that it's a very reasonably low interest rate that we have obtained for financing. On the right-hand panel, you will see the cash flows. I will just highlight one. Net cash from operating activity at 195 million for the 9 months. Is a very healthy level, more than enough to support the distribution that we give out every half yearly. Over the next page. Okay, this is our last slide actually. I want to give more time to Q&A. So you can see our track record in terms of distribution. Starting after our IPO, on an annualized basis, we distributed 4.62 cents, and then every year, on an annual basis, we have increased our distribution every year. And for the most recent half year, we distributed 2.71 cents for the half year. On an annualized basis, you may ask me what is the yield. Based on our current share price at 98.5 cents, the yield will be about 5.5%. So with that, I've come to, okay, I also want to highlight that not only that our DPU has grown steadily year on year since our IPO in 2017. In total, actually, we have returned 42 cents to our unit holders, and we have not come back to unit holders to raise more equity. We have returned 42 cents. Total of 1.6 billion back to our unit holders since our IPO. I think that is a pretty good track record. I've come to the end of my presentation, and I will be happy to hand over to Billy and happy to take any questions that you may have.
Thank you, Mr. Tong, for the presentation. I think it's brief and very quite comprehensive. I think we talked about this for a lot of times, right? A lot of people, whenever they look at dividend counters, they just look at the dividend yield. And this is one of those where when you show your last slide, I just want to highlight this, that the DPU growth is as important as the yield. So it's really a company that, I think investors should look into and ask a lot more questions on. Anyway, we do have a few questions already. I think it's from Roger. So basically, I think, could you share some examples of the non-residential end users of your fiber, the 52,000 plus that you shared, I think, on your slide just now?
Okay, I can do that. Non-residential end user are typically businesses, all kinds of businesses. Anything that's non-residential in an office building, in a warehouse, in a construction site, all these are non-residential end users. So 50,000 refer to this group of end users. Why only 52,000? I think for the non-residential space, unlike the residential space, the residential, let me talk a bit about the residential space. In the residential space, which could be our HDB building, could be condo, could be landed properties, we are the only one providing a fiber to all these buildings. So anyone that wish to use a broadband internet will contact one of the telcos and they will subscribe, and the telco will use our fiber. But in the non-residential space, commercial space, I call it, and I use the word interchangeably, commercial as well as non-residential space, there are other telcos that can also provide fibers. So we do have some competition in the non-residential space. So we have a total of 52,000 end user in this space.
Okay. And I think the questions on the residential, I think this is just to understand the business. So the 1.5 million is referring to one house, right? So regardless of how many people within the place, right?
Sorry again, could you repeat the question again? Sorry, I missed that.
The 1.5 million residentials connections, those are each housing, right? Each house, right?
Yes,
so regardless of how many.
All right, yes, regardless. It's just per fiber or per broadband connection.
Okay, I think this is on your growth. Where do you see the next area of recurring revenue growth will be coming from? Especially seeing that 60% of the revenue is tagged to the residential segment in Singapore.
It's a very good question. The NetLink is regulated, and now the mandate for NetLink is to make sure that we have a very reliable network. And also we are required to make sure that every new development, we are connected to every new development, every household, every building, whether residential or non-residential, and therefore we continue to expand our network. Even though most of us would think that, hey, Singapore is pretty built up, where is the growth going to come from? But actually every year Singapore is adding on average, about 25,000 new homes, HDB plus condo and other landed properties. So the growth will continue. And I think many of us know there continue to be many new development BTO all across Singapore. Tengah being the largest one. There are many other areas across Singapore, redevelopment, new development, and so on. So NetLink will continue to invest in the network. When we invest in the network, this gets counted into the regulatory asset base. All investment that we make in the network is included, and we will earn a return on it. So our growth will come from our investment into the network. Last year, we invest more than 100 million into the network. We expect this, last year meaning FY25, FY26, which is up to March this year, we will also expect to be above 100 million. So we will continue to make investment into the network to meet all these requirements. So our growth will come from all this investment. But I have to say, this 100 million over compared to the total asset base is not that high. So you can see that our total growth from regulated business is above 1%, but it's not like much more than that. So we will have a steady growth from our core business, low single digit. Other growth will come from other areas, but it depends on the level of activities. Like ancillary project will depend on the level of construction activities in Singapore. So when you look at NetLink, we are different from other businesses that can open a new shops or sell another product. Basically, we only sell one product. We provide fiber connectivity, and we make sure that we continue to invest in the network and grow this network. So the pace of growth depends on Singapore economic activity, the number of new housing formation, and all that. So in a way, we expect it to be very steady, very stable, hardly any downside risk, but the growth upside will be fairly more limited, I would say, because we are entering a more matured phase.
So a lot of that will still be coming from the residential segment, the growth for...
It will be plus others as well, because when there are more data centers, we also provide more connections. But if we look at it, but the residential segment already contributes 60%. So relative to the rest of the new growth, relative to the 60% will naturally be smaller, right? So overall, yes, it's dependent a lot on the residential segment.
Okay. And I think the questions from Roger is for the non-residential segment. What are these fiber needs in general? Is it commercial? Is it industrial? Or like you say, data center? What are those coming from?
Non-residential will be for broadband use, right? Largely for broadband. This could be for shops, for offices, for broadband internet connection. Even in the industrial complex, in a warehouse, it will also be for broadband internet connection, because we only provide fibers for broadband internet connections in the non-residential space. Outside of the residential and non-residential space, we also provide point-to-point fiber connections or connections to outdoor infrastructure like a lamppost, traffic light. Then this will be used for other purposes, not broadband interconnection for access to the internet, but broadband interconnections to connect sensors or mobile base stations. So these are the other things that we do. So you can see on my slide just now that there are connections to building connections. There are embed connections. Then these two types of connections, segment as well as embed connections, are for these purposes. Connect to sensors, connect to mobile base station, and so on. So let me give you an example to highlight this. If the mobile operators in Singapore decide to expand their network, they want to roll out more base stations, then some of them may come to us for more fiber connections. Or if there are more data centers coming up in Singapore, then they may come to us for data center to data center connections. But I have to say that this space is also competitive. We are not the only one providing fibers to data centers. There are quite a number of players actually providing fibers to data centers.
Okay. On the competition, could you share how are there like a lot of competition? How competitive is it in that area?
I think the area of non-residential first, the one that I talk about 50 over 1,000 connections that we have, I think it's pretty stable, probably reach an equilibrium. There are a few key players in it. So the number is pretty static. It's growing a little bit, but it depends on the economic activity in Singapore, whether there are new businesses being formed and all that. In the segments and embed space, um, I would not say it is highly competitive, but there are players in this space. It is competitive, and on the one hand, it's competitive. On the other hand, it also depends on the demand side of things, not just the supply side of things. The demand side of things is whether they are not, there are players that are building more data centers, there are players that are rolling out more mobile base stations. As we all know, the mobile operators have largely rolled out all of their 5G already. So it depends on whether they have new applications or whether they will invest in the next new technology that comes along. So if not, then the growth will be lower from that front.
Okay. I have not seen the number, but I think it's a question on your dividend payout. Is it is it 200% of your net profit and above your free cash flow level?
If you look at our cash flows, EBITDA number, if you look at our EBITDA number, we have not distributed all of it. On an annual basis, let me take a look at my financials. On an annual basis, my EBITDA is about 280 million, let's say, on an annual basis. This is just a rough figure. On a 280 million, we distribute about 210 million. So you can see that we don't distribute all of it. Of course, EBITDA is also used to fund interest. So our interest expense may be close to 20 million also. So 280 million, first I got to pay interest. Then that will bring it down to about 260. But I distributed about 210. Then there will be a balance of about 50 million. What do we do with that? We use it to invest in our network, right? These are capex investment in our network that will grow our total asset base. So not all of the cash flows, to answer your question more directly, then not all our cash flows is distributed back to the investors. Yeah.
Okay, so it's more sustainable in the sense, I'm guessing.
I would say it is very sustainable. Very sustainable. We have not distributed anything. And also we have to look at the business model. There is very low downside risk. We are not affected by price, volume, rental, reversion, occupancy, and all that. Right? A lot of people like to compare us with the REIT. So I'm talking in the REITs lingo, right?
Yeah.
So we don't face that. And of course to be more balanced, I will also have to say we also don't enjoy the same level of growth as some of the REITs in a way, because they could expand, they could do asset enhancement, depending on the property that they own. So we are quite somewhat similar and yet different in some way. We have very low downside risk, and we don't distribute all of the cash flow because we want to reinvest part of the cash flow into for future growth. Yeah.
Okay. I think the next question is on your capex. I think it was around, you mentioned about 100 million in 2025, right? Is there an expectation for FY 2026? And could you share like how much is it go for like your annual maintenance capex, or another how much does it go for the growth capex?
Most of our capex are growth capex because we do not have very large maintenance capex, because for fiber network, most of our spending are on the fiber network. For fiber network, actually hardly any maintenance required. You build the road, you build the underground ducts, put in fibers and all that. You don't really need to carry out maintenance. Of course, on and off, we do have maintenance. What kind of maintenance? If the public or the other agency report to us that some manholes are misaligned, too old, then we will replace those manholes and all that. So small amount of maintenance is there, but not a lot. We spend most of our money maintenance our building. Our building require some maintenance. It can be repainting, waterproofing, changing of equipment within the building and so on. But their share of the total maintenance is actually very low, maybe 10 to 20%, some year less, some year more. But most of the bulk of our expenditure is on our ducts and manhole fiber network. So they are all growth capex.
Okay. I think the next question is on the challenges that you see in the near future. Is it the economic growth? Is it the higher operating cost due to inflation, or is it competition? Is that an area that you want to that you will be worried of? You know.
Okay, quite a few things. A competition, obviously, we are concerned, but we are also a different kind of telcos. Uh, a large part of our business, as I have mentioned, is not competitive.
Mm.
Residential is not competitive. A smaller part is competitive, but just a smaller part, right? Non-residential as well as embed and segment. So that's the nature of it. And I think, and so we have to leverage on our strength. Our strength in those areas will be that we have a very comprehensive fiber network. With that, we are able to provide connectivity in most locations and at a very reasonable cost. I think we have certain competitive edge there. So we don't see competition as a huge challenge for us, but is there? It's something that we have to face and we have to deal with. In terms of costs, like every companies, we all face inflationary cost increase, and also when it comes to IT, when it comes to cybersecurity, this is an area that nowadays most companies will also face increasing costs. Not something that we like, but we have to do because of the threats around us. So we see more cost increase in IT and and cybersecurity. Actually, the other major cost component for us are all the contractor costs about rolling out fibers, digging the roads and all that. Actually, I think we have managed that quite well. We don't see significant increase, and usually we also lock in long-term contracts, 3 years at least, and we have pretty good rates. And over the years, we don't see a huge increase. There's some increase to deal with inflation, but they are all manageable. So cost is also not a big issue for us, other than IT, cybersecurity that I mentioned, and a bit of a manpower cost increase because salary has to go up and all that. So we are, I think I like to believe that we are less affected than many companies, right? Less affected than many other companies. Other challenges will be thinking of growth, right? We have to find a new way of growing our business. Although we have been running the business very well, building a very reliable network, we are still very dependent on the demand. Demand side of things are not totally within our control. So we have to think very hard about how to generate new demands for our business. That's something that the management is very focused on. How do we get more people interested to use more fiber? Use more fiber. One area that we spend a lot of time on, but it will take a long time to take shape, is on quantum key distribution. You will see in some of our announcement and announcement by others that the Singapore government and others are doing trials on quantum key distribution, quantum computing, to have more secure transmission and all that. So we are involved in terms of helping anyone interested in this to test their solutions, right? Quantum transmission solutions. So we support a few companies. We support some of the telcos. We support some of the research institute by providing them fiber connectivities that they need for their testing. So eventually, this area may need more fibers, but we don't know how long it will take because quantum is still an evolving field, and so it depends on demand and whether that there'll be more demand by financial institution and other critical infrastructure entities for quantum transmission, and whether or not that will lead to more requirements for fiber. We hope it does. It will lead to more requirement of fiber, but we are involved. We are in touch with all these people. But I want to say this thing will take time to evolve.
Okay. Of all this that you mentioned, which one would be your key ones to look out for? If I'm an investor investing in NetLink, what should I be paying attention to?
I think for investors in NetLink, I think I would say a lot of investors, I understand from talking to them, whether institution or retail, a lot of investors are attracted to NetLink because of the stability. And they understand that the risk profile of NetLink is very manageable, very low downside risk. and they like that. And they like the stability and predictability of the cash flows. And many of them also understand that growth-wise, if they are seeking very high growth business, then NetLink is probably not the stock that they invest in. But however, I think many people are investing in NetLink because it's part of a portfolio, a balanced portfolio that they seek. So I think what is attractive is that we provide the stability to a lot of investors.
Okay. I mean, since you mentioned this, there are a few questions I want to take, but I just want to continue with this because you talk about the stability. Because there are some Malaysian investors on the webinar as well. So just for those, give them a bit of context. Why is it that NetLink is seen as a stable, regulated infrastructure play in Singapore? Right. Just give a bit of context in terms of.
Okay. It's stable because we are not, I would say we are not a traditional telco. So when people look at NetLink, a lot of people will consider as a telco and compare us with other telcos, but that's not the right comparison. Firstly, we are not mobile operators. And I think we all know that most telcos in Singapore are largely mobile operators. But of course, some of the telcos are bigger. They are also involved in many other areas. I won't go into the details. But their business is generally competitive. They have to compete with other telcos. But we don't, right? We are more an infrastructure player, an essential utility provider. And we are regulated like that. The Singapore government and IMDA decided to set up this model because they would like an entity to roll out fibers to all the homes and all the buildings in Singapore so that everyone will have ultra fast internet access. That was something decided years ago, right? Around 2008. So NetLink was formed to do that. So what we do is just roll out fibers, make sure everyone that want a broadband internet access can have broadband internet access over fiber. And the regulator also decided to regulate NetLink based on a regulated asset-based model. That means it depends on two key parameters. One is total capex, and the other parameter is the rate of return. So regulator determine the rate of return every 5 years. So it's stable because once we only need to invest in the network so that and once this investment is accepted by the regulator that okay, this is rightfully invested to expand the network, and the rate of return determined by the regulator, then the revenue is basically fixed, almost fixed, because the revenue that the regulator decide is calculated based on these two key parameters: total investment and the rate of return. Obviously, the revenue will come from end users. So let me explain in kind of a very simplified way. Once the two parameters are fixed, total investment, rate of return, they will work out, okay, NetLink need to earn so much, X million every year to recover the investment over a long period of time. So if it's X million, then how does NetLink get X million? They just divide it by the total number of users. So all the user will pay for that, and we will get that revenue. So in a way, end user prices for us, for residential especially, is determined, is a derived number. It's a derived number based on the total investment that we make and the rate of return. So it's very stable. So this we go through this review every 5 years. Every 5 years, we will go to a regulator, and the regulator will look at the total investment that we have made, the actual investment they have made, and also look at the total projected investment over the next 5 years, the total projected number of users over the next 5 years, and to work out everyone should pay how much so that NetLink will get this revenue. I'm describing a revenue model that shows that our cash flow will be very stable because it's decided in this fashion. It's not depending on competition, because once you have competition, then you are affected by two factors at least: volume, how many customers you get, and also the price. Yeah. Because when you compete, you also have to adjust your price. We don't adjust our price. It's fixed for 5 years. We don't adjust our price. And our volume is based on our projection, already projected generally. So that's why our revenue is very stable. Cash flow is generally very stable. Of course, there are other factors, accounting, and sometimes we get fewer customers 1 year, a bit more next year. A bit of volatility is to be expected. But overall, this model means that we have a very stable cash flow and revenue over the long term, right? I can go on and explain also there is risk. Obviously, any model, any regulatory model will also have risk, right? The risk
Yeah.
is that every 5 years, we will discuss with the regulator to arrive at a rate of return. If the regulator decide a lower rate of return, then obviously I will have less revenue, right? But this is not something that this will be guided by some principles that we have agreed about more than 10 years ago. We already agreed, and the regulator has consistently applied the same principle. So we are quite comforted that this risk should be manageable, right? We will follow the same principle in determining the rate of return. I won't say no risk, but I think the risk is manageable, and we have gone through 2 rounds of negotiation with the regulator, once in 2016 and another one we completed in 2024. So we have had the experience. And I will also add that this model is not unique to us. Many regulated infrastructure asset has this model. In Singapore, there are unlisted entity like Singapore Power that has this, Singapore Power Transmission, Singapore Power Grid that has this model. Different regulator, but similar model. In many other countries, whether it's water business, electricity transmission business, or gas pipeline, they also have this model. Because this model is suitable for infrastructure that lasts a long time, infrastructure suitable for businesses that will not benefit too much from competition, but infrastructure that are essential to support the connectivity or growth in the country. So NetLink fiber network is seen as one that is essential to support economic growth in the country.
Okay. So just now you talk about the regulatory review of the product. When is the next one? Just wondering.
Oh, the next one, because we completed the most recent round, 1st April 2024. So the next one will be, we will start the discussion probably in 2028. So the new regime may kick in from 1st April 2029 or thereabout. Yeah.
So it's like around every 5 years, right?
Another at least 3 more years to go from here. Yeah.
Okay. There is a question on, is there any stock grants or options for the management?
No, we do not have grant or options. We want to make it very simple. But I will also explain that the interest of the management is aligned, very much aligned, even though we don't have a stock grant directly. What we do, and we actually explained in our annual report, there's one page on long-term incentive. The long-term incentive of the senior management is aligned. It works this way. So if I'm given, let's say, X month of long-term incentive, X month, let's say 3 months or whatever is X month of long-term incentive awarded this year, it will be converted into stocks, not actual stock, pseudo stock on paper, divided by the current share price into a number of units. So let's say I have $100 long-term incentive. So take $100 divide by, if the share price is $1, then I get 100 units. 3 years later, the 100 units will be converted back to a dollar amount.
Yeah.
But 2 things must happen. First, because it's a long-term incentive, there are targets every year over the next 3 years. Firstly, I must meet all these targets. Let's assume that we meet all these targets, and therefore I should, the 100 units granted should vest 3 years later. So if it vests, the 100 units will be converted at the share price at that time.
Okay.
If the share price increase, good for me. If the share price drop, that means I have not been doing a good job, then I also get less. So there's this alignment. It's very much like the stock option and all that, right? But there's this alignment. So all the senior management staff will have long-term incentive that will be converted to units every year. And then 3 years later, firstly, you must meet the vesting condition. That means you must perform according to the key KPIs. And then you'll be converted at the share price at that time. So there's at least a 1-page description of this, how this works in our annual report. So we have this since we start at the IPO. So yeah, I would say quite a lot of units held this way. So when they vest every year, then it depends on the stock price performance. So I'm aligned. I would like to see the stock price going up too.
Okay. And do you have a share buyback policy in place?
We do not have a share buyback policy because we believe that it's better to give people money than to buy back the stock. Right? So we give you distribution. If we have a share buyback, that means we will be using money to buy back the stocks from some investors. Right? We rather give every investors a distribution rather than a share buyback, rather than do a share buyback.
Okay. Currently, a dividend payment is half yearly, right?
Yes, half yearly.
Is there any consideration to move it towards quarterly, or is it
We have
to
been asked a number of times. We don't do it quarterly only because of the cost. You see, to make a distribution costs us a lot of money. It's like $80,000 at least each time we make a distribution, 80 to 100,000 cost because we have a lot of investors. We got to write, we got to distribute to a letter to them, and there's some administrative costs involved in making the distribution. So we thought it's not worth it. It's better to save the money for investors rather than do it quarterly. If it costs me $100,000 just to distribute money, yeah.
okay?
That's the main
And
reason why we don't do it quarterly.
okay, and in terms of the trend of the residential business, the numbers, has it been trending upwards, stable,
I
or how
think
does
it
it,
is stable.
or is it
It's stable.
fluctuate?
There's some fluctuation now and then because uh, sometimes there is churn in the market. That means people switch from one operator to another operators. And sometimes when people switch in Singapore household, right, when they switch to another operator, they don't immediately switch. They will get a new circuit first before they cut the old one later on. So sometimes there is a bit of a lag. And we are also witnessing over the last 2 years upgrades. There's a lot of upgrade from 1 gigabit per second connection to 10 gigabits or 5 gigabits per second link. So there's a lot more churn over the last 2 years. So you can see more fluctuation. And we have also explained that over the last 1 year, telcos some of the telcos have been cleaning up their own database. Apparently, we understand that some of them have a backlog of customers that have terminated their account or switch account to another operator, but they have not terminated with us, so they continue to pay us. So, when they clean up the database, they terminate, so it come at one shot, there's some termination. So you'll see in our numbers that this year, my connection numbers are not so good because some of them have cleaned up their database. Perhaps, I'm just speculating a bit, perhaps they are cleaning up database because of the upgrade also. That now they realize that, hey, they have a lot of the customers that are not on their list, but already terminated. So they are cleaning up their database this year. I think those should be largely done by now.
Okay. I think there's a question on data centers that built on Jurong Island in the next few years, that plan to. How do you see this impact the business now for you guys? Is there any
It's,
impact?
it's, I would say it will be positive for us, but I also want to mention that it's definitely positive for us and it's something we like to do. And there's quite a lot of activity that's going to happen in Jurong Island. There's going to be quite a number of data centers. And these data centers will need a lot of fiber connections because data centers is such that they like resiliency, they like diversity. They will probably buy fiber from different operators, including NetLink and others. But still, it's more business for us. But I want to say that it will not move the needle so much for us because if I sell 10 more circuits, 100 more circuits, compared to everything that I have, relative to everything I have, it's not such a big number. But it's still a good thing. It will still add to our revenue. So we are looking forward to it. In fact, we are already doing some planning work to expand our fiber network over there.
Okay. So can we expect to see CapEx spend increase as well in these areas?
Yes, we do see a need to increase our capex spend in this area, but it's probably in the region of a few million, not like a lot. Even if it's Jurong Island, not going to be a lot more, because we already have fiber connectivity over at Jurong Island.
Okay. Could you share how you guys account for depreciation? Yeah?
Okay. There are broadly two types of depreciation for us. I say two types because firstly, there's accounting depreciation that every company must do. We follow the same IFRS or the accounting standards. So we will do accounting depreciation for IT equipment, 10 years or less. For our underground ducts, 35 years. Not 35 years, sorry. I can't remember the exact number, but longer than 10 years, right? So we do it like any other company's accounting depreciation. So you will see it reflected in our results. I just mentioned that we have 139 million or so depreciation for the 9 months. It's quite a lot of money. So this affect our PAT, our profit after tax, after depreciation and tax. But it doesn't affect cash flows because depreciation is a non-cash item. There's another category of depreciation that is less obvious. It's called the regulatory depreciation. You won't see this number in the accounting days, but we track it. Regulatory depreciation means this. When we invest $100 in the network, the regulator will, based on their model, will return the 100 million to us over a certain period, regulatory depreciation period. Roughly, that regulatory depreciation period is about 30 years. I say roughly about 30 years because ducts is 35 years, fiber is 25 years, building is a bit in between, right? But roughly about 30 years because most of our investment is in ducts, 35 years, so roughly 30 years. So what it means is that if I invest $100 in our network today, I will get it all back in 30 years, plus a rate of return on the $100. I will give a simplified example. Based on 7% pre-tax WACC that the regulator agreed for the current period, $100 invested in our network, we will get $8 per year over 30 years.
Oh.
For every $100. That's the simplified way of this. We will get back the investment we make. We will also get a return. That's why $8. Otherwise, I'll get back less. All right, $100. Why I get 8 times 30? $240 back over. That's a calculation. 240, right? Back. We also actually, I have not mentioned yet, in our regulatory model, not only get capex plus a rate of return on the capex, we also get an OPEX pass-through, meaning the annual OPEX, operating expenses, we will submit to the regulator. Every 5 years, we will submit a schedule to the regulator and discuss with the regulator, and generally, they will accept our projection. Of course, sometimes they will say, hey, you projected too much OPEX, right, in some areas, but we will have a very open discussion about this, and so our OPEX is also passed through to the regulator. Pass through meaning it's included in the price that's going to be charged to all the end users for the use of the fiber. So yeah, we are regulated in this way. That's why I say our regulatory model, because of this regulatory model, our cash flow is very stable. So if there's an increase in OPEX, let's say a lot of increase, eventually it will be passed through. In the year that it happened, maybe not, because we already fix it for 5 years, whatever formula. Yeah. So every 5 years, we will recalibrate, right? So unlike other businesses, we do have a mechanism to pass through costs and investment. So this is a very stable model.
Okay. I think we still have one more question. I think it's talking about, I think there are some people that actually started to use mobile broadband instead of home broadband. Do you see this as a potential threat to your business?
We always look at this space. We think not really, for a number of reasons. One is most home users use broadband for many things today. Your TV, Netflix, or some people even for the aircon, right? You can connect or other appliances and all that. So a Wi-Fi router connected to a fiber-based broadband internet would be much more convenient. So you have multiple devices. So it's not uncommon for homes to have 10, 20 devices nowadays connected to a router. So it's much more convenient. If you use a mobile broadband, you can use a hotspot on your phone. Will be very inconvenient to do that. Of course, you can also buy a mobile router, although I don't see this as being very popular in Singapore. It will look like a normal router, except you got to put an eSIM or SIM on it, a mobile router. You could, but the bandwidth and reception will be limited. And if you use a lot of data, the mobile operator will throttle you because they cannot let you use more. Just because you have a plan and you are using more than many other people, you will find that you will be affected in some way later on. Yeah, so it's not going to affect us too much. Partly because the broadband prices in Singapore are very competitive already, and people see the convenience and the utility of this. Very unlikely. Unless it's a single person household, very small household, people hardly at home, then maybe they decide not to have broadband, right? Or very elderly, they don't see a need to connect. They just use their phone for internet and all that. There are such households in Singapore, but that is pretty stable. We have not seen an increase in the trend of people ditching the wired broadband and deciding on just mobile
Sure.
broadband. I think it's not likely to happen. You know, those that already don't need it, they will not need it because of their usage pattern. But most people will not. Those that have high usage will not switch to this mode of operation. Yeah.
Okay, quite kind of agree with you on that. And I think there's a last question from Roger. I think he's asking on the regulatory risk. I think this is something that we have in mind as well. Is there a chance that regulator could allow another competition to go into the fiber business for the residential home? Is that a concern?
No, our cost is something we look. Management have to think of. You see, once we are regulated in this manner, we will have to look at how we make sure that this regulatory framework is stable and sustainable. But I would say it's something that we will look at. We do look at it and consider it. But I will address this question more directly. It's not practical for a regulator to allow someone else because, firstly, it is very costly for someone new to lay underground ducts to all the buildings and to lay fibers to all the buildings. Of course, some existing telco have underground ducts to existing building, but it's also going to be very expensive for them to lay this fiber. Why it is more cost effective for NetLink is because we are the single operator in the residential space. We lay it, we offer it to everybody. All the telco can use our fiber. So we are more cost effective because we are serving not only one operator, but we are serving all operators. On top of that, actually, we receive a subsidy in the beginning to do this rollout. So this cost is lower for us. And the benefit has been passed on to consumer because we are now charging consumer less, right? Because of the subsidy that we receive upfront, we don't have to recover all the costs because part of the cost was borne by the government using the subsidy upfront. So we don't think competition in the residential space will be in the form of someone else coming into our space, rolling out to building. It's not going to happen.
Okay. And just wondering, just talk about the regulatory depreciation. Is it shown in the cash flow statement? I don't think so, right?
We don't show it because in the result announcement, we will show all the accounting numbers. But this can be modeled by analysts. I think the analysts do model it. Some of the analysts model it. And it is, they can look at our total property, plant and equipment over the years to see where it stands, to see what is the level of total investment every year. But I think for most people, it will not be easy to calculate this. Yeah.
Okay, no worries. I think you can look at our research report. That should have something. I'm sure my analysts will have something on that. I think there's one more. I think on your company debt, I think it's 100% on fixed rate, right?
Yes, now currently.
It's fixed for how long? I just wondering.
Okay. There is one tranche of debt that we will refinance before because it's due May this year.
Okay.
So this tranche of debt, 510 million, is in our annual report. We will refinance. So when we refinance it, then it will not be fixed, right? So it will be fixed if we refinance it by bond. But if we refinance it by term loan, then it will not be fixed. Then we will have to decide whether we want to hedge it. So you could say 510 will not be hedged soon, right? With the hedge will expire soon because we have to refinance this 510 million. But out of total of 910 million is only 510 million. It means at least half is fixed. Then the new ones, we will obviously hedge some of it or all of it, depending on the rates available. But we are quite comfortable. I think where we are quite comfortable. The average rate is now 2.39. It may change a bit depending on how we hedge the rest, but we do expect it to be below, barring any unforeseen circumstances, because the world is changing very fast. we will be well below 3%.
Okay, okay. I think I just have one last question, especially on AI. I think with the adoption of it being accelerated, do you see any measurable increase in the broadband traffic or fiber demand that could somehow benefit your network utilization?
We would like to benefit from it, but unfortunately, we are, a lot of users can enjoy the use of the fiber, uh, and they can transmit at much higher speed, right? So we don't charge people by the volume of data they transmit on the fiber, right? So we don't see a direct impact on our revenue, on our connection number because of uptake in AI or adoption of AI per se so quickly. Because even if there's an increase in traffic, data traffic and all that on the fiber, that doesn't mean I get more money. If it's the same fiber, I get the same amount. But what we will see, and I think we expect to see going forward, is that there will be more connections, right? People may need more connections. They may want dedicated links. Then that will lead to more revenue for us. But we have to wait and see. We don't immediately. I don't see a noticeable trend yet. There might be more traffic on the net, but it doesn't translate to immediately to more connections because people can use the same connections. In fact, our fiber network is highly capable of taking more higher speed, right? Today, people are using 1 gig connectivity or 3 gig connectivity or up to 10 gig connectivity. So same fiber is used. So you have not asked me a question. Can the same fiber be used for more multi-gig connectivity? It can. So yeah, it's the same fiber that we laid long time ago or now is carrying 1 gig, 3 gig, 5 gig, or 10 gig, doesn't matter. The same fiber could be used. So fiber is highly scalable, I would say. It can be used for, as long as the technology is there to transmit more data, the same fiber could be used to support that.
Okay. Just one more thing. Your EBITDA margin is around close to 70%, right? And
My
your EBITDA margin.
EBITDA margin, yes, close to 70%. That's right.
And earlier you talked about the increase in cost and all that, but given the pricing model, I'm guessing it probably won't eat into your margin, right? Because
It
you
does. If there's a higher cost in the short run, there will be some impact on the margin until
oh
we go to the regulator to pass back the cost through the formula, then you will be adjusted again. But in the short run, it could affect the margin, but it will be close to that number.
okay, all right, okay. I think that's it. That's all that we have. Thank you for your time, Mr. Tom. Thank you everyone for joining us during your lunch break. I hope you guys have a good week ahead. Thank you. Bye.
Thank you very much to everyone and Happy New Year.
Yeah, yeah. Okay. Bye. Bye.